Okay, good morning. Let's see. I didn't make a video yesterday because pretty much was a dead day for me. Nothing to really report. It was just the same old stuff. Tuesday, the market opened up and then it finished off here. So it didn't go very far. It didn't do a whole lot yesterday. I mean, for day traders, it could have been a day trade. You know, I like to get into trades where the market moves more than it did yesterday. So, and then you can see today, market's not really doing much. It's going up a little bit, making new highs, waiting for the Fed speech. Um, and to me, as you've been following along, I don't really pay attention to news because either way, this market's going to go down ultimately. Okay, so here's a daily chart. This is on the SPYs right here, which mimics the ES, the S&P, and so you can see that the market is right here, right now. We got a Fed meeting today. I believe, like I said before, that this market is eventually going to wind up down here. That's it right about there. Yeah. And so I was hoping that it would happen by the end of this month. It can still happen, just depending on what happens the rest of this week and next week. It can still wind up down here, but we'll see what happens. So also it could go up and wind up in here, before it goes down. I don't see that happening, but it could happen. So let's check out the other charts too. Okay, so here's the SPYs again, which is based on the S&P. So you can see that the market has gone up a little bit, like we were talking about. The Russell still hasn't moved out of its balance area. Actually, it's even in the negative right now. So it's not showing anything going up. We had talked about the Russell kind of leading the way, as it has been since last year on the way down. Dow Jones is not really going up that much either, has not gone back into this balance area. But the NASDAQ, again, is very impressive. It's gone up, and so has the S&P, or the ES. Not as much as the NASDAQ. NASDAQ's gone up the most. But because the Russell's down like this, and the Dow Jones doesn't seem like it's really following these two, I feel like the bias is in a downtrend. So I am sticking to my positions short with the put options. That hasn't changed. Now today could be a good day trade, only when it's almost 8 o'clock right now Pacific Standard Time, and the Fed speaks at 11. So that's in about 2 hours. That's 3 hours actually, and so at that time the market's going to really go crazy. It's going to start moving up and down for probably half an hour, maybe an hour, until it finds its ground, and then it's going to go in a direction. So that's good for day trading if that's what you want to do. You got to be careful because the market's going to be very volatile. So when I see these markets going up like this has been doing here, I see the options actually getting cheaper and cheaper. And when they start getting cheaper, that's actually a good time to buy. Just like stocks, when stocks go down and they hit bottom, and people say that's a good buy because they're going to go back up. Well, it's the same thing with the options. As this starts to go up, put options start getting cheaper, call options start getting more expensive. So I watch the put options, and I watch to see how cheap they are. And I'll show you an example here. Okay, so here's an example. If you think the market's going to go back down and you buy some put options, this one here, these are April put options. They expire in 13 days right here. So 13's for. And so if you think the market's going to go down within 13 days, then you can buy at the money. Always buy at the money here. At the money or in the money. And you can see that last price on this is 5.28. So if you're to buy 10 contracts on that, it's going to cost you about $5,000. That's pretty cheap. In fact, that's really cheap. And they're starting to get cheaper as the market starts to climb. And so with $5,000, a little over $5,000, you can buy 10 contracts on that. And you can gain a lot of value on this if the market starts heading down. So that's what I mean by cheap. You know, it's only $5,000 to buy those. Now, if you want to buy something that's out of the money, then you start going into here. This would cost about $3,000. But once you start going out of the money, you only have 13 days. So you got to be pretty sure about the direction of this market, because you're going to have to get out a lot sooner than 13 days. I would say within a week, just to be on the safe side. But anyway, that's just to show you how cheap these are. And that's what I watch, where call options are getting more expensive only because the market's going up, and put options get cheaper. And so you watch that. So that's what I've been doing, watching the put options. And as you can see here, I've got some positions already in place. So if these markets do start heading down at this point, if this is the top, then those options are going to gain a lot of value. Now, if this market starts heading up into this area, of course, they're going to lose value, and you have to get out with a loss. So this is the thing about trading. You have to pretty much know which direction this market's going. So how do you do that? Right now, this is downtrending. You can see that these are highs, and the highs here are lower. This high is lower than that, and this high is lower than that. So it is trending down. In a larger market, this looks like it's actually still trending up. And then in a larger scale than that, this market is trending down. So this is the part where you're going to have to use, this is where experience comes in. And you have to see where you think this market is going to go, where you feel it's going to go, just based on your experience. Now, you can rely on indicators and moving averages, but the best that those things are going to do is probably 50%. You know, that's how accurate they are, I mean, to me. And they're just going to take away from the experience that you have in looking at these charts. At least that's my opinion. So as it stands now, the market is still in the downtrend as far as from here to there. Could be in an uptrend from here to there, but it's still in a downtrend from here down to there. So I've got this downtrend and I've got this downtrend, opposed to just one uptrend here. So my bet is on this market going down, and this could be a good time to buy put options again. We'll have to, and you could wait till after the Fed meets and see where this market goes, because like I said, it could actually take off up here and just postpone this downtrend, the downturn. So there's nobody on this planet that can tell you what to do. You're going to have to make your decision based on your experience in a market. So this is why I only trade the SPYs. That's it. I don't trade any stocks. Once in a great while, you might find me trading gold and maybe some stocks, but it's pretty rare. I trade this because I know these markets. I know this market pretty well, and I know the options, the calls and the puts on this too. So, you know, why would I trade anything else? It doesn't make sense. I can trade a bunch of stocks, but it's the same thing. It's like you just need to trade one, at least my opinion, but one that has a lot of volatility and one that has a lot of volume where you can get in and out of the market, and there's only one like that, and that's the SPYs. That ETF is the largest, I think, on the planet. I mean, it's just so much volatility. I mean, so much volume. There's so many people trading it. So as you can see here, this is the spiders is on the top of the list, and the Qs are a close second. But sometimes the Qs are first. It just depends on what you're looking at. But either way, they're both really strong and very powerful as far as trading. I mean, you can get in and out of your positions quickly, and everybody wants to buy them. I mean, they're really popular, so that's what I go for, as opposed to stocks. I mean, stocks aren't as popular as these ETFs. There are some stocks, like Tesla, maybe, but still, that still doesn't compare with these. Okay, so the point is, why have your attention in so many different directions and just trade the SPYs? I mean, that's all you need to do. Just trade one, and then it gives you a lot of free time. You don't have to do any market analysis or anything. There's no indicators. There's nothing. It's pretty simple. And if you can make $100 a day trading this, then you can make $1,000 a day. You can make $50,000 a day, because all you do is you add positions. So $100 is no different than $50,000 because you're just adding positions. But the point is that if you can make $100 a day consistently, then you can definitely make $500 a day, 1,000, 50,000. Because you're so consistent and you know how these markets move, all you do is add positions. That's all you have to do. But, of course, you have to build that confidence. And you have to have some kind of strategy. That's your edge, is a strategy on how you trade these markets. So by watching me, you'll see my strategy, and then you can trade off of that and create your own strategy. Okay, so as far as a day trade, so what's this market doing? It looks like it's kind of balancing in this area right here, and right there. So this can be a good trade going up if the market decides to break up, and it can be a good trade going down if the market, because it's been building this balance area for some time here, which is good, because that means whatever direction it's going to go in, you'll probably continue to go in that direction. Because this is a volatile day, it could actually pop up like a fake out and then go down, or the same thing, go down with a fake out and come up. So you have to watch that on days like this, where the Fed's meeting, or if there's some kind of report like the CPI report. It seems like the market is so focused on those two, on inflation and interest rates, that it seems to move the market in the short term. And I do say short term because this market eventually, I believe, is going to go down. It's going to continue to go down. So that's the thing about trading with options or anything else, really. You do have to time this market, and you do have to know where the tops are, top and bottom, and then you trade off of that. Okay, so that's it. In summary, this market is basically just sitting and waiting. It's not doing anything. It's waiting for the report to come out in about 3 hours. So it's not. I don't expect a lot happening within the 3 hours, and then it's going to move after that, and then probably Thursday, it's going to have a nice direction on where this market's going. Usually, that's what happens. So I'm maintaining my put options. Of course, if this market starts heading down again, I'm going to continue to buy more put options, and I'll just write this thing down. If the market decides to go back up, like up in this area, then I'll have to sell my put options with a loss, and I'll have to wait for a top to come into play and then short that. that's the game plan. So I do have losses, not a lot. I'm pretty much in a 90% as far as gains. Losses, there's not very many, and if I do have losses, I try to cut them short so I don't have big losses. And the gains, I let those things run as far as I can to make as much money as I can, and then I will sell those. And that's pretty much how this game's played. Okay, that's it for now. I'll talk to you guys tomorrow. We'll see how this plays out today. It'd be an interesting day.